First Citizens Bank and Trust Company, a North Carolina-based bank, will acquire Silicon Valley Bank that failed earlier this month and was taken over by the FDIC. The deal was announced on Sunday, March 27, 2023, after the FDIC decided to pursue a full sale of SVB rather than a breakup. First Citizens stock price jumped in pre-market trading on Monday after the announcement of the deal. The deal will nearly double First Citizens' assets and give it access to SVB's customer base and the tech and venture capital sector. The deal may also boost First Citizens' earnings and profitability, as it will acquire SVB's assets at a significant discount and share the losses on the commercial loans with the FDIC. First Citizens will pay $72 billion for SVB's assets, which include $56 billion in deposits and $72 billion in loans. First Citizens did not disclose how it will finance the acquisition of SVB's assets, but it may use some of its existing capital or raise additional funds from the market. However, the deal also carries some risks and challenges for First Citizens, such as integrating SVB's operations and culture, managing SVB's loan portfolio and exposure to the tech sector, and facing potential regulatory scrutiny and litigation. The FDIC will retain about $90 billion in securities and other assets that were owned by SVB. According to the FDIC statement, First Citizens did not pay any cash for SVB's deposits and loans, but rather received equity appreciation rights in its own common stock with a potential value of up to $500 million from the FDIC. Equity appreciation rights are a type of incentive that gives the holder the right to receive a portion of the increase in value of a specified asset or equity over a certain period of time. First Citizens and the FDIC entered into a loss-share transaction on the commercial loans purchased from SVB, which means the FDIC will absorb part of the loss on those loans. First Citizens said it will leverage SVB's strong relationships with private equity and venture capital firms, as well as its digital capabilities and geographic diversity. The deal is expected to calm anxious investors, as Silicon Valley Bank was the largest bank failure in the U.S. since the 2008 financial crisis. First Citizens has a history of acquiring West Coast banks and FDIC-assisted transactions. First Citizens had around $100 billion in total assets prior to the deal and had recently acquired another California-based bank, CIT Group, for $2.2 billion in 2020. The FDIC will retain some of Silicon Valley Bank's assets, while First Citizens will acquire the rest at a discount. The FDIC estimated the cost of SVB's failure to its deposit insurance fund to be approximately $20 billion. The former Silicon Valley Bank customers and branches will become part of First Citizens. Do you think this is a good move for First Citizens?